transaction did not have an effect on profit today for the time being. Right? Are you understand? So there are transactions which may or may not impact profitability immediately. Does it mean this will never affect profitability? No. When I pay, money will go from my pocket and I am going to call this as my expense. So, but today it really did not hamper my cash. So what we learn from this is that there are a few transactions where cash does not change. Depreciation on fixed assets. What is depreciation? Reduction in the value of fixed asset. Also called as wear and tear in the value of an asset. What does that mean? So if these benches have been prepared 3 years back and I am still using them, it means their quality will deteriorate. If I purchase them at say 10,000 rupees a bench, today if I ask you that please buy this, you are not going to give me 10,000. Why? You will say you used it for 3 years and now you take it maybe only for 3,000 or 4,000 second hand. But because there is a reduction in the value of an asset, I am going to call depreciation as my expense. Why? Why am I going to call depreciation? So cash never change hands.
That's my indirect loss. Like if I were to sell the item.
What is indirect loss?
So the day I got it, if I were to sell it, I could have given 10,000.
Still you won't get it.
But you will get less only. The day you touch it, you get less. So this is where it's an indirect loss.
So why depreciation is an expense?
Depreciation एका asset ची value कमी करतो.
So what?
So
is it an expense?
market value कमी होते.
Okay, my second question, is it an expense? Or would it be more appropriate to call it loss? There is a loss in value. But you know that nominal account is debit, all expenses, losses. We treat them synonymous. But there is a slight difference. Although colloquially we say depreciation is an expense, but it is more appropriate to call it loss because it's a loss in the value of a fixed asset. Similarly, for intangible assets like patents, goodwills, you will have amortization, right? Now, so my point here was there are transactions which may not lead to any change in the cash. However, they will affect the profitability sooner or later. So, such transactions are called as non-cash transactions. Provision for tax. Am I really paying tax today? Just providing. So then it is a non-cash. Depreciation, non-cash. Amortization, non-cash. All of this. General reserve, transfer to general reserve. I don't transfer cash. It is only a book entry. Whenever I say I transfer to.
Also all the provisions are just in the books.
All the provisions are just in the books. That's the unfortunate part. Very rarely, so there is something called as a sinking fund concept which you will study in graduation. So there are some companies who tend to keep aside money equal to their depreciation into some particular investment. So that is called a sinking fund investment account. You create a separate account for that. So for example, if I have a car which is of 10 lakhs, yesterday I was explaining this to my 12th standard students. So if I buy a car of 10 lakhs and I know that the depreciation is 25% a year, and I am using straight line, which means that in 4 years this car is going to come to 0. 25, 25, 25, 25, right? So, what is good practice? And remember this in your personal finances also when you start earning. So, if I keep aside 2,50,000 and invest it in a fixed deposit. So, I bought a car, after a year, just take 2.5 and keep it in the bank. Second year, another 2.5, keep it in the bank. Third year, another 2.5, keep it in the bank. Fourth year, also the same. What happens is, because you are keeping it in bank will give you interest which is at least equal to inflation. Because the bank rates are aligned to inflation at least. Which means, 2.5 that I keep on keeping aside every year, after 4 years it's time to buy a new car, I will have 10 lakhs which are adjusted for time. That is called as time value of money. Money has You have to
Yes.
consider that. So my grandfather bought a plot of land 10 years back or 20 years back for 5,000 rupees. Today the value is somewhere in crores. Does it mean, or when I say that my father started his job and his first salary was 1,300, and look at me, I am so great. My first salary is 30,000. It's not about greatness. It is just about money value.
Value of the money increased over time.
If I buy an ice cream scoop today for 75, after a year, if I say that no, I won't pay extra, I have to pay only 75, or I can't give you any extra money, not even a single rupee, then the ice cream shop will, shopkeeper will say, okay, I'll give you a smaller scoop. Right?
Yeah.
Or if I have to get the same scoop after a year, I have to pay higher. That is the effect of inflation. $1, when I went to US in 2008, I had purchased dollars for 55 rupees. Today $1 is 72 when I convert it in my business. 72. Does that mean that money has gotten some different importance? No, it's not like that. In fact, rupee is depreciating every day, and that's why to buy the same $1, I have to pay higher sum. Right? So today, if I have to keep some money in bank, why do I expect an increase in it? Why do I expect a return on it? Because I know that after a year, when I want to use that money really, I would have to face inflation. Something that I'm buying for 75 today, because I postpone my present consumption to a future date, my money also has to increase. Otherwise, how will I be able to match the expenses? Is this clear?